Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to go ahead and show you how to trade Fiserv. I'm going to go ahead and show you how to use this stock current trading momentum in order for you to make consistent income. Now, if you guys are new to options trading or you're trying to use options in order to make some additional income to help you supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be showing you how to use Fiserv stock in order to make consistent income. And for those of you that do not know, this stock has been experiencing some severe volatility, and volatility is what helps us to make more money with options premium. That being said, you guys know how we do. We like to go ahead and get down and dirty with options. Now, as per usual, I'll be giving you guys a step-by-step walkthrough of these option strategies in order for you to be able to follow along with me. And if you so choose to, maybe you could implement these strategies in your portfolio. Our feature stock for today is going to be none other than Fiserv, and that ticker is going to be FY. Now, let's go ahead and start off by going to the advanced feature right here in order for us to go ahead and see the chart. Now, with the Fiserv chart, we're going to go ahead and go to the 1 year outlook to see how the stock has been doing. Now, based on the 1 year outlook, I mean, look how beautiful this chart is. Now, for those of you that do not think this is beautiful, let me show you this right now. I did go ahead and I gave you guys TTD before when it had a huge pullback like this. Here it is, a big huge drop here and a huge drop here. I also showed you guys when I bought right here around 40, it was around 48, and I sold right here, and it was a $600 return. Now, the fact that the stock went up further does not bother me. I locked in my gains. I also went ahead and gave you guys United Health before anyone was talking about it, which is UNH. I showed you guys when I bought right here, and I showed you when I sold right here, and I locked in around a $3,300 profit. Now, I think I have the same opportunity with Fiserv, and I'm going to show you how I intend to capitalize with this stock. Now, the reason I say this stock is absolutely beautiful is because it meets my optimal prime chart setup. That setup is when the share price is currently trading below the 200-day moving average. Now, the 200-day moving average for Fiserv stands at around $76. Let's round it off to $77. So what that tells you is that for the past 200 days or the last 6 months, this stock has been trading around $176. Unbeknownst to us of what has happened over the last couple of days and the last couple of weeks as well, the stock is currently trading, if you look to the top left here, at $65.41. The stock is now down a whopping $135.81 for the year. That is the definition of a crash. Now, the second thing I like is the RSI and what the RSI is doing. For those of you who do not know, the RSI represents the relative strength index, and what the RSI does is actually a momentum indicator that helps us to determine whether stock is overbought or oversold. The current RSI of Fiserv is currently sitting at 23.91, or let's say 24. Now, just for you guys know how to read the RSI usually goes from 0, it goes all the way up to 100. But what we usually focus on is the movement between the 70 RSI and the 30 RSI. With anything going down towards the 30 RSI tells us that the stock is going into oversold territory, and vice versa. Anything going above the 50 towards the 70 RSI tells us that that stock is overbought. Now, currently, Fiserv sits as an oversold territory. I actually like these kind of setup. The reason why I like it is because it shows me that there's more upside than there is downside. Now, can the RSI continue to go down? Absolutely, yes, it can. Now, based on this chart setup, let's go ahead to the 5-year mark. And what I'm going to be showing you is what I showed in a previous video. I did buy this stock, and my average cost of this stock is around $120. So I will go ahead and tell you exactly what I'm doing, and I'm going to show you option strategies as well. So I went ahead and I tried to get a very strong support for this stock, and the strong support was around $120. Most likely, or apparently, you guys could see that the stock has been way below that right now. So let's go ahead to the actual stock right now, and I'm going to go ahead and show you what I'm doing with this stock. Okay, so here we are back on the chart. Now, the previous video before this, which was actually two videos before this, I did make a video about Fiserv, and I gave you a lot of information that helped me determine what option strategies to go ahead and use. For today's video, I'll be adding to those option strategies because a new opportunity has presented itself. And for that, what we're going to do, we're going to go ahead and we're going to go to trade 5 options down to the bottom here in order for us to open up the options chain. Now, this information that you're seeing right here in its entirety is what representative of the option chain. Now, what the option chain does is that it gives us enough information in order for us to go ahead and make a very informed decision before entering any option contract. Now, speaking of option contract, before I go ahead and give you a step-by-step walkthrough of these option strategies, I would like you guys to do yourself 2 favors. Favor number 1. Always make sure to do your own due diligence before investing. What may work for my portfolio may not work for you. Second favor, always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go tits up like Fiserv has for the last couple of days, then at least you know how to get out of the trade. That being said, let's go ahead and get into these options. Now, the first strategy that I'm going to continue to do with the Fiserv is going to be none other than the DCA method. The DCA simply stands for dollar cost average. Now, as I mentioned, I do have an average cost of this stock at $120 price. Now, here's my level of thinking. After doing my own due diligence, I've decided that this stock has very good value at $120. Now that the stock is trading at $65, which is almost half the price of $120, there is no doubt in my mind that I'm going to get more. Nothing fundamentally has changed about the company since I started buying at $120. So I will continue to DCA in order to increase my position in Fiserv. Now, while I'm doing that, because I'm going to be holding the stock for the long term, while I'm doing that, I always like to make money now. I'm not one of those traders or investors that like to buy stock and have it in a portfolio and wait until 65 years old to retire. I need income now. So what I'm going to do, I'm going to add some option strategies to the DCA model. What I'm going to go ahead and do, I'm going to go ahead and I'm going to, first of all, you need to wait until the stock settles down. Once it's settled down, then you could go ahead and do this option strategy. So let's go ahead to buy. We're going to go ahead to call and we're going to choose our strike date. The strike date I'll be going with is going to be all the way out to January 21st, 2028, which gives me 830 days to expiration. The reason I'm going all the way out is because this stock is still going through some extreme volatility and no one knows where the bottom is going to be. That being said, always make sure the stock has found some level of bottom, which no one knows. But what you can do, you wait until the stock shows clear signs that it's going to go back up. Then you go ahead and do this option strategy. This option strategy is going to be known as the LEAPS option strategy. LEAP stands for Long-Term Equity Anticipation Securities. The reason why I like to get my LEAPS when the stock has had a huge decline is because it presents an opportunity for me to have more upside than downside. So with the buy, with the call, and my long dated expiration date, I'm going to go ahead and choose my strike price. Now, the strike price, to be quite frank, is going to be anything which I deem fit for me to buy, because the level that the share price is right now, there is no level of support. It is unforeseen territory. So the strike price I will be going with is going to be the $60 price. Now, you can go with the 65 or you can go with the 55. Both of them are good as well. Like I said, the current share price is in uncharted territory right now, so there's no evidence that tells us which one is going to be the best one. So I'm going to choose the best one that works for me, and that so represents the $60 price right here. Now, with the $60 strike price right here, this is a buy option strategy, so I'm going to have to pay. The amount I'm going to have to pay is going to be $27.50. In the real world, this is going to work out to be $2,750 because each option contract contains 100 shares. So you're going to multiply the price you're going to pay per one contract by 100 shares, and that's going to give you $2,750. Now, why am I going to go ahead and do this particular option strategy? Well, I'm glad you asked. The reason I'm going to go ahead and do this option strategy is in case the stock do decide to rebound overnight or whenever, I want to capitalize on that momentum. And I think by doing an option strategy gives me the best opportunity for me to make a very quick return on this stock. Don't forget, I also have the DCA method, so that's going to help me to capitalize on this stock movement in the long term. Now, why would I go ahead and do this again instead of just going ahead and buy the shares outright. Like I said, the current share price is in uncharted territory, so there's no telling if this share price is going to continue to go down. So I'm going to use the DCA method in order for me to get an average price of the stock based on what it's going to be doing for the next couple of weeks, for the next couple of months. This option strategy that I intend to use just allows me to control 100 shares in order for me to go ahead and make consistent income. Now, I'm not just going to go ahead and just buy this option strategy and wait to see what Fiserv is doing. There's a purpose to this option strategy. Like I said, this option strategy is known as the LEAPS option strategy, which stands for Long-Term Equity Anticipation Securities. How do you benefit with this option strategy? Well, the first part of it says long term. So you benefit by keeping this option strategy in your portfolio for a long period of time. As the share price goes up here, so too does the option contract, and that's how you make a lot of money. If you decide to exit this options contract, the best way to exit is to set a profitability limit. So let's say you say whenever the share price goes back to $80, I'm going to close out the contract and lock in my gains. That's one way to exit this option strategy. Now, the reason why I get this, I mentioned before, is because I want to control 100 shares of the stock. Now that I'm able to control 100 shares of the stock, I will be able to use it to make consistent income. So with the LEAPS option in my portfolio, this is the additional option strategy I will do to capitalize on this momentum right now. So let's go ahead to sell. We're going to go to call. And now I'm going to change my expiration date. I will be doing what's known as monthly expiration date. So that's going to give me November 28th, which gives me around 29 days to expiration. 29 days is close enough to 30 days, so that's fine with me. Now, because of the extreme volatility that this stock has just gone through, you need to be extremely careful with this option strategy. Do not go chasing premiums. That means do not go for the highest premium. Make sure you have a strategy. Here is my strategy. So my strategy is that now that I have sell and I have call and I have my short dated expiration date, I'm going to go ahead and choose my strike price. The strike price I'll be choosing is going to be above the current share price of 65. And I'm going to go all the way up because I'm looking at this here, a chance of profit. So let's keep going. I'm going to go all the way up. I'm going to be looking for some chance of profit of 90% or higher. 90% starts off here, which is going to give me the $83. The difference between 65 right here and 83, that's going to be an $18 difference. So in order for me to lose this option, this share price here has to go up by $18, which is going to be fine with me because if it does go up by $18, then my LEAPS option is going to be up as well. Let's go ahead and we're going to choose this one right here, which is going to be the $90. Now, the reason why I'm going to go ahead and choose a $90 strike price instead of the $83 strike price is that I'm extremely conservative. So I'm going to give myself a lot more wiggle room. Now, with the $90 strike price, my chance of profit went up 3%. So it's now at 93%. What this tells me is that there's a 93% chance that this trade works in my favor, or there's a 7% chance that the trade goes against me. Now, for me taking this risk with using my LEAPS option as collateral, I'm going to be paid. The amount I'm going to be paid is going to be 50 cents, or in the real world, this is going to be $50. Don't worry about this. I never cleared the first one. So on a monthly basis, I stand to make around $50. Now, there's no telling what this share price can do. I have mentioned this a couple times. This share price is in uncharted territory. So at any point in time, this share price could go all the way up to my $90 strike price and this trade goes against me and I have to close out the trade, or this share price could continue going down way past $50. We do not know. So the whole point of me doing this option strategy is that I have a LEAPS option to capitalize on whatever the share price decides to do. And I went out and got enough time that gives me so this trade could work in my favor. Secondly, for taking the risk and controlling 100 shares and have it in my portfolio all the way out to 2028, I'm going to go ahead and use it to make consistent income. In order for me to make the consistent income, I'm going to go ahead and choose a very high chance of profit because I'm trying my best not to lose my LEAPS option. If I lose my LEAPS option, then I lose the ability for me to make consistent income. So there you have it, investors and future investors. With Fiserv, do you buy or do you wait? It all depends on the strategies you're going to be using. Here's what I'm doing. I will be buying. I'll be buying Fiserv using the DCA model or the dollar cost average model. I will be trading, I will be getting a leaps option, and I'm going to be using my leaps option in order for me to do covered calls. This new strategy that most of you may already know is what's known as the PMCC, or the poor man's covered call. It does not mean you have to be poor. It just means that you're now able to control 100 shares for a lot less than if you had to pay the outright share price to be trading it. So for those of you who had made it to the end of the video, you guys are the real investors and future investors. If you guys have any questions about Fiserv, its current share price, or which option strategies can work in order to make consistent income, then let me know in the comments below. Now, I do go ahead and produce all these free content in order for me to help as much people as I possibly can. So if you guys do know of anyone that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.